Alrighty, folks, hope you are doing well. The spring home buying season is officially getting started, and we are seeing strong home buyer demand enter the marketplace as mortgage rates drop. The challenge, of course, in today's market is that we still have a lack of housing supply coming online. So we're going to be talking about that and unpacking a little bit more data in today's video. We're going to look at existing home sales and new construction as well. Let's go ahead and jump right into it. According to Redfin, we have 2.9 months worth of supply. That is up 1 month year over year. We do have higher levels than we saw in 2021 and 2022, but we're still well under the 2020 levels. One thing that I will say is that if this chart went further back, inventory levels that were prior to 2020 were significantly higher as well. So anything less than 3 months is still what we would consider a seller's market. It is very low supply in the marketplace right now. Bit of anecdotal evidence from San Jose Redfin agent Angela Lagon. There are plenty of serious buyers out there, but there's not enough inventory. Anything that comes on the market at a decent price in a desirable location is getting multiple offers. The best strategy right now is to be aware of every home that's coming on the market soon and be the first one to see it. Median home price on existing home sales is going to be right at about $358,000. This is down 1.7% year over year. So home prices have come down. And if this trend continues and these prices level out, we're going to see larger year over year decreases as we get into the summer months here. But one thing that I want to point out here is that the median sales price is just where half of the transactions are taking place. This is not an average. And right now we are seeing the biggest softening in home prices in the move up house and the luxury market. So a lot of the homes that are going to be below this median price in your quote unquote starter home or entry level, those prices are actually staying rather strong right now. And some more interesting feedback from another Redfin agent out of Boise, Idaho. We're not seeing the typical spring seasonal increase in business. There's no seasonality. Home buyers and home sellers are hyper focused on mortgage rates. If rates end the week down, all of a sudden buyers are out and they're making offers. If rates end the week high, buyers disappear. And to his point, mortgage rates are actually coming down. The average mortgage payment right now is sitting at $25.18 per month. This is down off its peak, but just slightly. So as affordability is improving just a little bit, we're seeing that uptick in buyer demand. And according to the Redfin chief economist Daryl Fairweather, some of the banking industry chaos that we're seeing unfold over the last couple weeks probably prevented the Fed from making a larger rate hike. And as a result, he believes that mortgage rates are unlikely to increase again unless the next inflation report is worse than expected. He continues to say that sideline buyers should be on high alert in the coming days and weeks, which could offer a window to lock in a rate closer to 6% than 7%. And he's absolutely right. Mortgage rates have actually trended down. Matter of fact, I've never really seen the market quite so volatile. This is the 10-year Treasury yield, and in 2 days alone, we went from just over 3.6%. As of this recording, we're sitting at about 3.37%. And that's bringing the average 30-year fixed mortgage rate down to 6.38% for a conventional mortgage. And to really illustrate the volatility we're seeing in the mortgage market, take a look at this chart of your 30-year fixed conventional loan. This is going back to the beginning of this year. So roughly about 3 months, we started at around 6.5%, went down to 6%, we shot up to over 7%, and in a few short weeks, we're down back into the low 6% range. That is a ton of volatility here in the mortgage market. Purchase applications were actually up about 3% week on week, which is an indication that we are seeing an uptick in buyer demand. But if you zoom out and look at the big picture here, we are still down 36% year over year. So there is significantly less buyer activity than we saw just 1 year ago. And that is resulting in significantly less transactions taking place in the housing market. Here is the new home sales data that I thought was really interesting. Sales actually increased, but so did the median price. New home sales actually rose 1.1% month over month. The expectation was that they would be down 3.1%. This is the 7th beat in a row here, but only because January's 7.2% month over month spike was revised dramatically lower to a mere 1.8% month over month. If that January level had held, this would have actually been a 4.5% month over month drop. Now, I was trying to think through why the numbers in January would have been revised down dramatically lower. And if somebody knows for sure, please leave it in comments below. But I'm going to go ahead and make the assumption that it has a lot to do with canceled contracts, because my understanding on how these numbers are calculated for new home sales is that it's when the contract is executed as opposed to existing home sales when the transaction actually closes. I would be very interested to find out that if in fact it had to do with canceled contracts, Why were some of those buyers backing out? Did it have to do with affordability? Did they get cold feet? Are they concerned about the banking system? What do you think? Leave it in comments below. There's about 200,000 new home sale transactions that actually took place. Sales rose in the West and the South. Those are the two largest regions by purchases. The number of homes sold in the Northeast plunged to the lowest level since June. Meanwhile, this is what actually surprised me the most. The median home price actually rose for new construction. As of this recording, we're sitting at about $438,000. Now, the housing supply continues to contract even in the new home market. There were about 436,000 new homes for sale at the end of last month. That's actually the lowest level that we've seen since April. And this represents 8.2 months of supply at the current sales rate. And I think this is a really important data set to pay attention to. In one of my prior videos, I talked about home builders being in a really good position in this market. And if you think about it, this is why, is because they control when they build and how much inventory they actually bring online. The median home price, as we just mentioned, is actually gone up, and they're in a position right now where the material costs are actually going down. We've started to see mortgage rates come down, and they can just dial back when they start building and when they release these properties. And here's another chart that's kind of driving that point home. These are new single family houses that are sold, but they're not yet started. You can see that from September to now, we've seen a rather large uptick. So these are essentially pre-sales, people that are putting homes under contract before they actually start building them. They're currently sitting at about 149,000. This is actually the highest level they've seen since March of 2022. Now, this resurgence of home sales and even prices is not necessarily what Jerome Powell wants to see happen. So we could be in an environment where if inflation stays sticky, the Fed may have to continue to raise interest rates to bring it down. And with all of the turmoil going on in the banking industry, if lending standards tighten, we could be in a position where it becomes harder and harder to qualify for a mortgage, causing transactions to sort of grind along from where they are today. Only time will tell. We're going to have to really pay close attention to this market and see how it unfolds. Where do you think the market is headed? Would love to hear from you. Let us know in comments below. I know there's folks that are on both camps, some that think either the market is going to crash or prices are going to remain elevated. And I think with the economic climate that we're in and some of the data out there, we could probably make an argument on either side. All right, that is going to wrap it up for today's video. If you found the information useful, please hit that like button, subscribe for more weekly housing market content just like this. We'll see you on the next video. Take care.